Good morning, Doug.
Hey, happy Veterans Day to all you veterans out there and all you non-veterans. Happy Veterans Day to you too.
I can't even express my gratitude towards veterans, and I think my view is probably different than yours, just as a function of growing up during Vietnam, being on TV. TVs were brand new. TV was on during dinner, and just the harshness of that expression on TV is hard to imagine if you didn't see it back then. But just growing up as a little kid, seeing that and appreciating all the young men and women's lives are at risk and what it went on. So, and the wars since then seem like they've been a lot more from above than on the ground like that. And
Well, yeah. I mean, I don't know. So many of the folks, even you and I have friendships with, connections with, they were the boots on the ground kind of guys, and so yeah, we are grateful for all of our veterans. And I think back to even getting my hair cut with my grandpa. He didn't serve in the war and World War II, but he always talked about the men that he knew who did. And there's just some heroes out there. These events shaped lives. And so this morning I was at a Veterans Day play, and it was so cool to hear these fourth graders singing. I mean, we all sang the Pledge of Allegiance. We all sang the Star Spangled Banner. And the kids gave quotes from presidents and generals and leaders over the years. And it was refreshing. And so, well, we'll just go right into it. I mean, like today, I was at the local Starbucks, and this dude walked in. He was probably your height, little taller maybe. He had his Navy hat on and a leather jacket, and he had these F-14 patches on the back. I was like, yeah, I better go see this guy. Wants to have coffee with me. And he did. And so, we talked about a lot of things, from Corvettes he was interested in to his kids. And soon after that, I called a good friend of ours and woke him up in Phoenix. And here's what he said. He said, be an American. That's my wish for you, is that you can be an American. And he says that can mean a lot of different things, but he said he just trusts that if we can just be an American, things will be okay.
that's really cool. One of the ways we kind of celebrated the Veterans Day was we invited a veteran to dinner couple weeks ago, 3 weeks ago maybe, and just had conversations what that was like and what that might mean. For me, it was helpful for somebody that never put on a uniform to understand the thoughts of somebody else. So if you're a veteran out there and you're willing to join somebody at a dinner table, I think it'll help them. If you're not a veteran and you want to invite a veteran to your dinner table, I think that'll be enlightening for everybody, really.
We've learned a lot from our veterans. I can think of some really amazing conversations, like with Vietnam veterans. And just that was no joke. And so we are just, we're celebrating you guys and thankful for all of you.
I had some notes I didn't ever bring up, and I'll see if I can find them real quick. But I was on a conference call 2 or 3 weeks ago with a CIA former agent by the name of David Bridges. And what David was talking about in the conflict in Ukraine right now, this fellow works for Fidelity, but from the intel he's getting, that the Russian people have had, in their estimation, 80 to 85,000 deaths since March.
That's brutal, man.
To put that in perspective, Vietnam, we lost 55,000 over like 15 years. And so just how brutal war is, and how we feel about our veterans as well as other people. I assume most of the young people that get involved in any war weren't just thrilled to go out and be involved in that scenario. They maybe were thrilled to serve their country, but didn't really want to have conflict with other young people. Yeah. And so So really appreciated time for me when I think about this. Hopefully you've had plenty of time to review our disclaimer, and I'd encourage you that wet leaves are dangerous. If you're driving out there and the leaves get wet, don't think you can do your
Here's the
Mario
other
Andretti.
problem about wet leaves is they don't move. Like when
Oh.
you're going to blow them, they just stay put. And so if you're like me and you have a bunch of leaves, get out there right now.
Yeah, it looks like it's getting ready to wet them down around here. Well, I'll kick this thing off, Doug. I did a little research for us. Yesterday was a remarkable day in the market.
It was crazy.
And you know what? I threw away. I thought my little thing I shared with everybody would show up on the screen here, but it didn't. This was S&P numbers. I think I did that. Oh no, this is the Dow. So let me share this with y'all. The Dow closed yesterday, according to my data, at 33,715. That was up 1,200 points, or the part that didn't show up over here was 3.7%. So I went to the internet machine and took some of the biggest moves ever in US history.
Okay.
And then I prioritized them by date. So I ranked them by date here. And so I took
this comes natural, by the way, folks. This isn't something like Keith has to like, oh boy, I gotta do all this work. No, like this is his straight up curiosity. Like Friday night, he'll probably be doing something like this.
It's well, my curiosity isn't the numbers. My curiosity is the frankness of people telling you things that are so that maybe aren't so.
Like with absolute like confidence.
Yeah, and so I do this in a lot of areas. Like if you ever get into a spiritual conversation with me, I've dug deep and go into deep holes and things like that. The stock market, all sorts of things. I don't take the common answer, because one of the common answers in the market is if you buy and hold, that's much better than trying to make any timing decisions. Because if you time, you're going to miss the biggest up days. And so that there's publications say, well, if you miss the biggest 10 days in a market cycle, this is what your net return was. Well, it's really disingenuous, because this shows you all the biggest days in history here combined with all the worst days, and they don't talk about if you miss the worst days.
I've never seen a big money management company have a nice like 3-page brochure on the worst days of the stock market.
Right. And if you just look, I thought it was interesting, because like if you look right here, October 30th, 1929 was one of the best update. This is percentages, this column, that's what I was looking at. It was up October 30th, 1929, it was up 12.34. That's a fun number anyway, percent. And yet the previous 2 days we were down basically 25%. So it didn't really matter if you got that 12%, because then you had two offsetting days right here, right? Like your 11/6/29, you were down 10, and then you were up 9. Well, you don't even break even with that math right there. And so I just went through and looked at it and just was curious by it, because even talking about history, people will tell you the 30s were a really horrible time in the market, but look at 1932 here.
Some good days.
You're up 9, 20, 30, almost 50% in a few short days in the 1930s.
How far, like, what's the newest on your timetable?
Well, I did 1987 because that one created
sentimental.
Well, yeah. so and what happened in 87 was that a lot of the people for which we're spending time studying with were out of the market in August of 87, and there were a lot of bad days before October 19th in 87, and so then if you look at 2008, which again creates some stomach acid for me, but some of those folks were out in probably in 2007 is when they got out, and in 2008 was really a bad market. What's really curious to me of all these historical things, the worst market most of us have lived through was the 2000 to 2003, and there weren't really any big down days, and there was only one big down day. It just was a Chinese water torture. Yeah, and so then if you go to 2020 and you look at what was going on in 2020, there was a lot of volatility. So
I think I can remember that 3/16/2020.
I must not have sorted this right because I got an 1899. Sorry about that, folks. I got that 1899. Who knew? Anyway, I just
That's
wanted,
cool.
yeah, I just
Yeah.
wanted to share that with you yesterday was a big day in the market, and yet we're trying as we help you not to let fear of missing out drive our emotions on how we respond for you.
Yeah, I think that's one of the benefits of just having gauges to look at. And it does, emotions are so hard to manage when you're managing your own money, let alone managing other people's money and their futures and their expectations and fears. And so one of the benefits of data is just it gives us some gauges to look at. And you guys know I like to look at a few of them. One of our gauges looked a little more optimistic today, which we were encouraged by that. And then I saw where the AAII, the American Association of Individual Investors, the bulls actually dropped from last week. We went from 30% down to 25%. And so it'll be interesting to see what they vote for in the next week.
And that is a reverse psychology, right? Like if the bulls, the optimistic people drop, it means it's good. It's good. It's optimistic for the market.
It can be.
Yeah, that's generally how
historically we like to see the bulls right around the 33-34%.
Yeah.
And so they're down a little lower than where we like to see them. But another one of the gauges that we saw is that 50% of the S&P 500 individual names are above their 200. Now that was a flash, and so it jumped up just like the market did yesterday. But nevertheless, we've started to see some things that are moving in the right direction.
Yeah, let me show you the benchmark I've been using to look at the moving averages, and so this is you said 50% of the S&P, and so the weakness for which we've been speaking the last few weeks is in the NASDAQ area, and this includes a broader range of stocks. But the yellow indicates at least half of those are below that moving average, and the white suggests that we're in a more of a bullish situation in those. So what we increased the number of stocks in our database. The number of stocks trading below their 21-day moving average dropped pretty dramatically from last week, and I think a lot of that would be from yesterday's activity, and so less than half of those are trading below their 21, and then the 50-day moved quite a bit, and the 200-day didn't, though. That tells you, I think what that suggests to you is that there's a lot of NASDAQ situated stocks that are pretty far away from their 200-day moving average, and it's gonna our friend Patrick Walker says that if this is a bull market, the start of a bull market, it's going to last more than 6 hours or a single trading
day. I saw
day.
that tweet yesterday.
Yeah, and I like that.
That was really good.
Yeah. Let's look.
It'll last more than 4 or 5 hours or whatever. You'll have time, I think is what he's saying.
Yeah, let's just look at this, and I'll set this up for you so you can share in our joy of looking at the markets here. What do you see on the NASDAQ here, Doug?
Well, when I popped this up, I was on a financial technology webinar with a friend of mine out in Seattle last week. And when I did the Zoom share, this popped up and she's like, "Oh my gosh, what is that? What are all those squiggly lines?" And so for you, if you're kind of new to taking a look at this, yes, it's a whole bunch of squiggly lines. So that's the first thing you might see. The first thing I see is the reason to get up in the morning. I love to look at this kind of stuff. And so, just take notice. And if you look to the far right, and Keith, if you want to drive along here and just kind of hover your mouse, but the vertical lines, that expresses the price movement of the day. And so yesterday was one of those pretty wild days that Keith highlighted earlier, where the price just had a lot of movement. And one of the benefits of that lot of movement is it closed at the high. And so you'll see a small, if you're looking at your iPhone, this is going to be pretty horrible, but there's a small horizontal line where it shows that the price closed at a high. And that's very encouraging to me. And it did so picking up higher volume, which is near the bottom of the screen. You can see where the blue line shot up way above its 50-day average. And so that basically meant that there was more force, more of a buyer's force coming into the market. So this is the NASDAQ. This is the weakest of the indices that we normally highlight. And it's the weakest mainly because the technology stocks have really been troubled. And the technology companies, the leaders of those companies are the first ones, or maybe the loudest ones. I don't know. They're getting most press for coming out and saying, we're laying off, and it's big time numbers. It's not like, hey, we're just pulling back everybody's salary, or hey, you're not getting a bonus. No, I mean, it's your job's gone. And so I think that's that kind of plays along with this chart. It just shows that the strength of the technology companies hasn't been as robust as some others.
Yeah, and the economy is kind of a trailing indicator to the market. So the market anticipates a recession. I saw a data point this week that the velocity of money in the United States is 1.125 during the third quarter of 22. The lowest number recorded in the velocity of money is 1.1. The highest velocity in history is 2.2. And what that velocity of money means is a dollar, how fast is a dollar being turned over by consumers. And so what that number tells me is that the velocity of money it's not moving as quickly. People aren't as quick to let go of their money, which again is a psychological thing that leads towards recessions. And when we look at this NASDAQ chart, the interesting thing is we had marked this up a few weeks ago. Is this the bottom right over here? And we showed this thing called a follow-through day. And we're pretty much right back at where that follow-through day is. Yeah. And thankfully, we didn't get a new low right over here. Was that was that Monday? Probably, yes. We didn't get a new low. So that's a little bit encouraging from where we've been in this market.
Mm-hmm. Yeah, and so this is kind of step one of the encouragement for Keith and I when we're looking at this. The big shot in the arm will be as this crosses its 200-day moving average. This is the S&P 500. It's been a little healthier than the NASDAQ, as you can see, but we're still trading under the 200. So, like if we were in an airplane, the seatbelts would still be on.
Yeah, and the only place where the seatbelt sign has come off is in the Dow Jones industrial average. And the reason that is reflecting differently is that it doesn't have those as heavy of a weighting as those FANG stocks, and it's got some oil stocks in there that weight heavier, and that's not necessarily great for the stock market. You don't want commodities driving the way, because you may make some money on your investments, but your cost of living is going up. But this is what we want to see in the broader market. We want to see right over here. I don't know if you can follow me. This was when the market was still trending up. You've got the 200-day, and you got the 50-day, and then this green line is the 21-day. Those are the numbers I showed you earlier. That's where we want them stacked. We want them stacked in that order. We don't want the 200-day above everything, and then the 21 and the 50. We want them stacked where the long-term trend is being validated by the short-term trend. And the Dow's it's the first part of the market that's showing that. And so there's some optimism to be had.
It will do that again.
Yeah.
Like when my friend said, "Hey, just be an American," I think about, like, I was looking at U.S. markets this morning. I was looking at foreign markets. I was looking at several different Asian, South American ETFs, specific ETFs, and one of the very great things about being an American is the risk taker, the innovator, the persons who are making things a little more smooth. They have opportunity to be rewarded, and the stock market's a great reflection of it.
Yeah, I'm just gonna say I'm not a big Zuckerberg fan from Meta, Facebook, and so I'm not angry or anything. I'm just not a big fan, but he laid off 11,000 people like that out of his 87 or 88. So basically an eighth of his team he let go in one. I don't know if it was an email or what it was,
Yeah.
but what makes America better than any other option is in Europe. If you tried to do that, you might have to. It might take 2 years to do that, and that whole time of reducing your staff, the capital inside the company is just being pulled down and drug out. And if you want to look at just even an American one, that's basically socialism, and that, and I'm sorry for you, our friends that work there, I'm just calling it what it is the post office, right? Like, you don't ever hear the post office reworking the management of their business, laying off people, and improving efficiencies. Well, when you have more of a socialistic way of running the business, you can't move as quickly as the capitalistic side of things in America. And so although layoffs are painful, they're destructive in the short term for businesses and families. That's the nature of capitalism. It's a destructive recreation of things.
And even, with those layoffs, I mean, there has been some severance, a few months' pay.
Yeah.
And so that's that is at least something to rebound or help someone rebound. And so I was encouraged by that.
Well, I mean, we still have low unemployment, right? So
Yeah.
those folks can find employment somewhere else.
Yeah, very low unemployment.
Yeah. So very, very, very interesting time. And we really haven't, I don't recall that 2020 had a lot like that recession. When you look at it, I think it's just a little sliver. I don't remember a lot of people getting laid off from that 2020 recession.
I mean, that's the craziest V up. I mean, it's like down, boom,
Yeah.
and we had one of those in 2018, towards the end of 2018. But I mean, oh my goodness, it's just, yeah, I don't even know if we could go back to 2020 and say, what is that? Is that a case study at all?
Yeah. Well, I think it is. If you just don't do that. It's like the stove. Do not do that again. Please, government, stay out of it. Just don't do that. I saw this quote this week I thought was really interesting. It said, economic depression cannot be cured by legislative action or executive pronouncement. Economic wounds must be healed by the action of the cells of the economic body, the producers and consumers themselves.
That's us.
Yeah. You know who said that?
John F. Kennedy.
No, earlier. This man got thrown under the bus in the 1930s. Herbert Hoover.
Cool.
Yeah, and really, it's true. It hasn't changed. The government can't fix the economy. What cures the economy is the consumers and the producers working well together and playing well together. And it may take time sometimes. You never know. But the government can't fix it. If you think the government can fix it, you're going to find yourself, I think, in bigger challenges in the future. Yeah. So. I think we both saw this. I think you had I saw somebody sent this to you last week, but I saw it that I don't know about you. I was cheering against the Phillies. If you're Phillies fans out there.
No, that wasn't me because I don't like the Astros.
No, I wasn't cheering for anybody, but
yeah.
But I saw this kind of snippet. Like there's a thing between correlation and causation. Do they happen? The Phillies don't cause anything, but what the quote was, 1929, it isn't the Phillies, the Philadelphia Athletics won the World Series. The 1980 Phillies won the World Series in the 2008, and it just basically said every time the Phillies win, there's a the Philadelphia wins a financial crisis, and we're not. Yeah, okay. We don't want a financial crisis. Yeah. We don't want a financial crisis, but those are completely different than even a recession usually. So. My kids sent me a TikTok, and I have to get one of them to open it up. But it showed the 2008 financial crisis, and it showed first the picture of the dad in the midst of depression and working through it shows him going through all his bills, and then all the kids are playing dance music in their rooms with their video games. And
TikTok's the only app I've asked my kids to take off their phone.
Yeah, it's I don't have it. They must spend a lot of time because they send me some interesting things there. So what else do we need to talk about, Doug?
Well, here's an observation. We've talked about the supply chain. That's been a topic over the past 2 years now, and I like to say, if you want to see a measurement of supply chain, just look at your Ford car dealer's lot and see if there's any inventory on there. And the supply chain may have less to do with chips and more to do with just the amount of money that's being spent in the economy. And you're starting to see cars stack up on dealership lots again, which is pretty interesting. That could have something to do with interest rates. But the opposite of that is this. A good friend of mine called me and he told me that in the Denver airport, 10 Ford trucks were stolen recently. And so it caused me to think about that. And the most stolen vehicle in America today is a F series truck.
Wow.
A Ford series truck, 150, 250, 350. In 2020, there were 44,000 stolen. And so here's the deal. Chevy pickups were number 2, and a Honda Civic was number 3. And so here's the thought behind that. This thought is also fresh. You know, we have some friends who are in South Florida, and they've been dealing with something we can't even imagine. I mean, a good buddy of ours told us, you know, that Fort Myers area kind of looks like Haiti. It's just all wiped out. And so, you know, our hearts go out to you guys, and we're thinking of you because our lives here are normal. But if you have a Ford pickup truck or a house in Florida, what are you doing? You're dealing with insurance companies today. And so I want to just encourage everybody on your next rainy day to break out your auto and home policies and make sure you know what you're protecting. Make sure you know what you're paying for. Some of our homes have gone up in value. Do you have enough insurance to cover that? It's worth a phone call to your agent and check in with them, and just it's like your investments. Just know what you have.
That's a great word. It's there's just a lot going on, Doug, right now. There's you've got those kind of crises that have gone on down in South Florida. You've got the election this week. You've had you know, a downward trending market for a year now. Basically, the NASDAQ peaked out about a year ago. And there's a lot of variables that can be really pessimistic. And I'm just thinking, what is it that you do to keep a positive attitude? Because I think a lot of folks can really, particularly if they're watching TV or things, get down in the dumps. So maybe we can finish this show this week with some thoughts on things to kind of keep a positive attitude.
Well, I believe everyone's best investment is themselves. And so I think for a person to just look themselves in the mirror and say, how am I investing in myself right now? And yourself could be your family. It could be your spouse. It could be your personal health. It could be a challenge that you're looking to knock off or succeed in. It could be a book you wanted to read that maybe you didn't feel smart enough to read in high school. I mean, just these types of things are drivers for me. And then just having a purpose that's greater than myself, greater than my time on earth, legacy type stuff. Those are the drivers for me. And those are the drivers for me in good seasons and bad seasons.
That's a great word. Yeah, like the 08, tell me about that TikTok. That was legit. I went through a season of depression. It was harsh, it was brutal. And every time I've had difficult times just working through the emotions of a situation, I've found that exercising is really critical, getting outside, determining what things are putting the negativity in your thoughts and kind of weaning those out of your system, and just realizing that there's just great days ahead. That's just a big deal. And I'm thrilled about the possibilities. However, I do know some of us have gone through those seasons where in Indiana, we're approaching those gray days that can cause you some negativity. And we just want you to know we're a source of encouragement for you. We're thankful for you. And just know great days are ahead. Hope you guys have a spectacular weekend. I'm gonna begin 20 hours of training going through this much data. About Lee says that almost 2 inches of data. And
but I would argue that's like one of the most exciting times of the year when this conference comes out.
Yeah, and it's crazy that at this point in my career, I'm as jazzed about it as I would have been 30 years ago. It's really cool. It's a blessing to be able to serve you guys.
Have a great weekend.
We'll see you soon.